Hey money makers, it's our 100th episode of MoneyMovesJa. Thanks for sticking with us through it all. It's been a pretty amazing ride. Here's a look back from our very first episode. Hi guys, and welcome to the very first episode of Money Moves, brought to you in association with Exim Bank's business advisory service. So what was your favorite episode so far? Comment below. Well, today we're talking about a very important topic for any business. All companies, whether small, medium, or large, should have a balance sheet. Why, you may ask? Well, this financial statement provides a snapshot of what a company owns and owes, as well as the amount invested by shareholders. And trust me, you're gonna want to know this information. I'm Kalilah Reynolds, and it's time for another episode of Money Moves JA, brought to you in partnership with Exim Bank's business advisory service, giving you the tools to grow your business. We have with us this week General Manager of the Finance Division at Exim Bank, Errol Barnaby. Hi, Mr. Barnaby. Thank you for joining me.
Thank you, Kalilah. It's a pleasure to be here.
We are talking about a very important topic today, and this has to do with preparing your balance sheet. A lot of small business owners don't have a clue about accounting, never took accounting in high school or college or anything, and they're just trying to feel their way through it. So whether it is that you are preparing your balance sheet yourself using software like QuickBooks, or you're just trying to understand what your accountant has given to you, I think it's important to know. So walk us through it, Mr. Barnaby. First of all, what is a balance sheet?
It's basically a financial position of your company at a moment in time. It will reflect your assets, your liability, and your equity. Basically, if you ask what is your network, your balance sheet is the one that speaks to the position of your entity. So at that moment in time, your balance sheet should speak volume for your financial strength.
So tell me, what are the different parts that we need to be aware of?
Okay, so it will represent the assets. Assets, basically, it's items that you own. Assets can be current, it can be tangible, it can be intangible. The assets can be non-current as well. So those are the list of items that you own. On the other hand, you'd have some liabilities, some obligations that you owe. And so the balance sheet should capture those as well. And then it will show also what amount you have in the business as your equity. So if you look at the main area to be your assets, your liability, and your equity.
Right. So intellectual property would come under intangible assets?
Yes, it is the form of intangible assets, but just so you know, though, that is not one of those assets that is converted to cash. But it's one of your non-current assets item. And intellectual property, and I mentioned earlier about the goodwill, that could be one of an intangible assets as well. And also maybe you have some trade names or trade symbols, whatever you value and put on your balance sheets.
What's the difference between current and non-current assets?
Basically, it's what you can convert immediately to cash. You'll have some assets like your receivables, your inventory, and so forth. Those are items that you say they are current because they're easily converted to cash. The others are the non-current are the others, such as probably a property. You have motor vehicles and stuff like that. So the comparison, those are the ones you can easily dispose of and get some proceeds from.
So something like equipment would fall under current
it's
or
not
non-current. You can sell it easily, but
yes,
not
but
the same as receivables.
Right. The receivables, it's almost calling your debtors to come and pay you up. That is quick cash. Your
Right.
inventory, you can sell those at any point in time. But for equipment, those are normally the
Long
turnaround time for
time.
those normally a longer period. And so it is not, they're not deemed as current assets.
Right. All right. So show us some examples. What does this balance sheet look like? Let's bring it up.
Okay, can I bring it home?
What are we looking at here?
Okay, so we're starting with the assets. As I mentioned, assets are what you own, the company owns. So for the current assets, you have what you have in the bank account as cash and cash equivalent. And I put some example of a company. And just to point out that I put 2 years worth of financial data. Normally we like to compare the corresponding year to see all the assets or these are performing. So for the current assets, we have the receivables. As I mentioned, you can convert that easily. You have inventories, and where you have other current assets, you could put their prepayments. Sometimes you have insurance when you pay up front, but if in the event that the insurance is canceled, then you can draw back on the balance of the life of the coverage. And then we have the non-current assets now, which I mentioned, with the property, plant, and equipment, motor vehicle. These are not easily, as I should I say, they're not liquid as the current ones. They take some time to dispose of, and therefore they are in the non-current category. So, and then we mentioned the intangible assets. The intangible assets are like goodwill. I don't know how many small businesses will have these on their books, but sometimes if you have a name out there, you can certainly value this your goodwill and put it on your books as a form. Anybody who would want to purchase your business will enjoy the benefit of that assets, that goodwill as well. All right. So the other item here on your balance sheet are the liabilities, and here you can break out between the current liabilities and the long-term liabilities. Current liabilities primarily are your obligations within the accounting period. So let's say for 12 months, these are what you categorize as payable within the accounting period, are the next 12 months. The long term is more, as mentioned, longer than that. So you have a longer time to make good on those obligations. However, sometimes what we have here, we have notes payables as long term, but sometimes a loan payables can become current because it falls due within the accounting period, and that's the time you would move that. You move that to the current liabilities. So it's always good to separate them because the long-term obligations should not be impactful on your performance for the period that you're reporting on. So the attention should be on the current one that falls on payable. Next, we have the equity share capital, and this is where your funding, your investment would come in. Where you have the 75 million here, it would be the amount that you have injected in the business. And so what you have after that is what their earnings over the period, and these over time they add up to your total equity. So your equity can grow based on your performance. That is, if you're making profit, your retained earnings will be growing as well. And so your assets, while this is growing, your assets should be growing as well. So overall, at a typical balance sheet, you could look at it where it's captured your assets, your liability, and your equity. Now, the question is that your assets is fundamental because you should not be in a position where your assets is way below your liability or your equity. That means you will be insolvent. So in a typical equation, your assets should equal both your liabilities and your equity. If it's the other way around, you'll be showing sign of insolvency.
So once those equal each other, your assets equal your equity and your liability, that's what is referred to as being balanced.
What is referred to as being balanced, in this case, where your total assets is equal to the liabilities and your equity. That's where your balance sheet will represent a balanced situation. And that's where I mentioned that your assets should equal your liabilities and plus your equity. Or you can also consider balance sheet to equation to your equity should equal your assets minus your liability, where you take the equation from. So what is needed for it to be balanced out is basically whatever your equity total, your retained earnings will be added to your equity. And that will normally come from your income statement, income and expenditure statement. So at any given time, your total assets, the total of your total assets should equal to the combination of the liabilities and the equity. That's what gives you your balance sheet.
All right. So, why do we need a balance sheet? So, for most people, for most small businesses, maybe any business, what is important to them is the profit and loss statement. So, you look at, how much money did I make? Why do I need a balance sheet as opposed to that?
So, your income statement is reflective of your performance over a period of time. And your balance sheet is basically your position, your financial position at a moment in time. Your balance sheet depends on the support of your profit and loss statement. And that's where I mentioned earlier about the equity, that the whatever profit or loss you make, that will affect your equity, that will take it into your balance sheet. So it's a support to your balance sheet as well.
All right, let's end it there. Thank you very much, Mr. Barnaby. This has been a great help.
A balance sheet reflects the financial position of a company in a moment in time. It shows the company's assets, liabilities, and equity. A good equation to remember to ensure that your company is performing well is assets equal liability plus equity. Your assets should equal your liability and equity combined. If it's the opposite, your company may face bankruptcy.
So, have you done a balance sheet for your business? What did you learn about your business the first time you did one? Comment below. That's it for this episode of MoneyMovesJa, brought to you in partnership with Exim Bank's Business Advisory Service, giving you the tools to grow your business. Visit their website at eximbankja.com and visit my website, KalilahReynolds.com, for a summary of this episode. You can click the link in the description box below. I'm Kalilah Reynolds. Until next time.